coupled with initiatives such as the Production-Linked Incentive (PLI) scheme, should bolster private investment activity amidst improving capacity utilization, de-leveraged corporate balance sheets, higher uptake of bank credit, and favorable financial conditions. The Manufacturing Purchase Managers Index was 54.0 in March 2022 compared to 55.4 in March 2021. Based on data provided by the NSO on the supply side, real gross value added rose by 8.3% in 2021-22, with its major elements including services exceeding pre-pandemic levels. Sector-wise, agriculture has remained the silver lining, while contract-based services, manufacturing, construction were hit hardest and have been recovering steadily. The government has announced several fiscal measures to incentivize capital formation, attract foreign investment, and create employment. The Reserve Bank of India has also stepped in to provide adequate liquidity. Indian economic growth is estimated at 8.6% in FY 2021-22. Source: National Statistical Organization, and 7.2% in FY 2022-23. The GDP growth estimate for FY 22-23 is 7.3%, down from 7.8%. So, latest estimates released by S&P. In view of the global geopolitical situation arising from the Russia-Ukraine conflict and elevated global commodity prices, commercial vehicle sales are directly linked to economic activities in the country. While global automotive industry demand largely recovered from the COVID-19 pandemic, severe pressure from ongoing semiconductor shortages, the Russia-Ukraine conflict, and raw material inflation hampered growth. The Indian commercial vehicle sector saw growth of 55% over the previous year due to market recovery from COVID-19 and growth led by infrastructure projects and last mile connectivity for the growing e-commerce business. At this stage, FY23 demand looks promising due to the healthy growth indicators from segments like construction, infrastructure, and logistics. Demand is expected to improve in the near term due to the phased introduction of the vehicle scrappage policy. Growth in the CV segment is expected through rising vehicle demand, albeit against a background of raw material inflation and ongoing semiconductor shortages. Here are some of the trends that will drive demand for commercial vehicles. E-commerce will boost retail sales with approximately 25% of new sales expected via online channels. Connectivity and digitalization will open new opportunities and avenues for industry. New business models such as freight aggregators will create demand for commercial vehicles. The vehicle scrappage policy for government vehicles and reopening of schools and offices post-COVID-19 will also help revive the bus market. With the implementation of GST, the increase in mega fleets is a possibility, creating a demand for sophisticated and technologically advanced commercial vehicles. A well-thought-out vehicle scrappage policy with attractive incentives will help spur demand for commercial vehicles in the short term. The increasing adoption of digital connectivity solutions will also make fleets increasingly safer, more efficient, and helps lower the total cost of ownership. The Government of India's FAME 2 scheme has led to an increase in the adoption of electric buses in the country. Appropriate policies and intervention from the government to support state transport undertakings in procuring buses with alternate fuels like CNG, biofuel, electric, etc. would also lead to further demand for commercial vehicles. The production cycle will increase in the coming years as a result of the export market seeking budget trucks that are compliant with the global emission standards and quality norms. The commercial vehicle industry is likely to sustain this growth for the next 2 or 3 years. Demand, particularly medium and heavy-duty commercial vehicles, is likely to also benefit from the various government incentives to help revive the economy. Now, I would like to share insights on the specific initiatives undertaken during the last quarter. OEM. The company is making progress in being a player of significance in the e-mobility arena. We secured sizable orders for delivering the electric compressors from major electric bus manufacturers and have commenced deliveries. We are jointly working with various OEMs to upgrade the braking system to regenerating braking system, that is EBS, in electric vehicles to improve the regeneration efficiency. This is also the right time to make it known to you that we are selected as one of the component champions in the auto PLI, production linked incentive. As we see stability in the demand for the products in our pipeline for e-mobility, we will improve the local content so that we can offer high quality products at competitive prices. Further, as the regulation that commercial vehicles should be equipped with electronic stability control, ESC, is soon expected to be implemented in buses from April 2023. The company has secured nominations from major customers to be a vendor for the set solution. In addition, the company successfully demonstrated its capabilities and progress in developing the autonomous or advanced driver assistance systems to some key players in the industry. Aftermarket. The Indian aftermarket grew by 20% as per ACMA report, whereas ZF Commercial Vehicle Control System India Limited registered 28.6% growth in FY21-22 versus the previous year. Our aftermarket sales are largely driven by the solution provider approach. We grew our reach within the country by adding new national and regional distributors in 2021-22 through a project called Project Compass. This has helped us in growing our sales in new product introduction into the market. The company has launched a customer center as part of a successful e-commerce and retail connect program. A WABCO reward scheme was also launched via the customer center for retailers and mechanics for certain select products. We have also had significant orders for our ABS retrofitment kits and trailer pulse, a digital solution, which helped the AM growth story for Q4 2021-22. Through our digital customer business, we have connected over 60,000 vehicles to our platform, through which serving the OEMs and the aftermarket fleet with a connected solution for a subscription. Export growth was flat in the quarter due to the shortages of semiconductor components, as well as sea freight delays due to COVID lockdowns in China, with even container availability still a critical issue. The freight rates have increased fivefold in certain sectors. We are planning to expand capacity for some product lines, including car compressors, air compressor assembly, automatic slack adjusters, and spring brake actuators. Commodities. The greatest single impact on the industry and our company has been the commodity price inflation. Between the same quarter of the previous year versus the current quarter, aluminum is 55.5% more expensive. Hot rolled steel rose by 30.9%. Cold rolled steel was up 21.7%, declined by 23.4%, and copper by 19.4%. This had a significant impact on our material costs, although we have worked very closely with our customers and secured partial compensation to help offset this impact. We are implementing multiple initiatives, including seeking further compensation from the customer, driving productivity initiatives in the supply chain and factories, increasing localization, and redesigning some products to the cost. Exchange rates. The company has significant export content, and our standard reporting currency is euro. The quarter began with a euro of INR 85.22 on the 1st of January to 84.01 on the 31st of March 2022. As of 30th April, the euro has further depreciated to INR 82.57. This had an impact on our results because of the mark-to-market of forex-dominated assets and liabilities. The global commercial vehicle market continues to feel the impact of semiconductor shortages. We are working with our global supply chains to move carefully with agility to protect the interest of our customers and business. Integration and expansion. As CVS India, Commercial Vehicle Solutions in India, our vision is to help shape the future of commercial transport systems in India. By leveraging synergies across the setup group, we are uniquely positioned to offer the next generation of solutions and services for commercial vehicles and fleets in India and worldwide. Our support will play a key role in making them more efficient, safer, connected, intelligent, and automated. Under the umbrella of ZF's strategic vision for next generation mobility, we will leverage our capability to innovate, integrate, and advance CV vehicle control systems and set the pace to address the challenges of the commercial transportation industry in India. By mobilizing commercial vehicle intelligence, we will powerfully contribute to the next generation mobility corporate strategy. As we informed you in our earlier earnings call, the name of the company has changed to ZF Commercial Vehicle Control Systems India Limited. This took effect in March 2022, with the shares in the company trading under the new name since April 2022. The new trading ticker symbol is ZF CV India. Our expansion project at Oragadam is going through the ZF Group approval process. While we have commenced the activities pertaining to land development, we expect the construction to commence during the end of Q2 or beginning of Q3. We will invest approximately 150 crores within the next 2 years on the expansion, including plant and machinery. Pursuant to the application made under the production-linked incentive scheme for the auto sector, the company has been selected as an eligible auto component manufacturer to receive benefits from the scheme. The PLI scheme will enable the company to claim incentives on incremental sales achieved on the manufacture of specified advanced automotive technology products for a period of 5 years beginning FY22, 2022-23. Corporate social responsibility outreach. At ZF Commercial Vehicle Control Systems India Limited, we strive to be a responsible corporate citizen and make a positive difference through our corporate social responsibility initiatives. Our CSR initiatives are based on 4 tenets: improving road safety, enhancing the quality of life of neighboring communities, contributing towards environmental sustainability, and upgrading skills. Over the years, our contribution towards society has touched thousands of lives in several ways and benefited a wide range of stakeholders. The scope of our initiatives has now been expanded to make a positive difference to even more of our stakeholders. Our road safety initiatives align with the ZF's vision of zero accidents and zero emissions and the Government of India's Vision Zero initiative that addresses challenges around road traffic fatalities. Through the structured road safety initiatives, 43 programs were conducted in the year. We rolled out vehicle check camps and around 2,000 vehicles have been safely checked so far. Holistic community development encompasses a spectrum of initiatives ranging from access to quality health care to infrastructure upgrading. We continue to proactively support hospitals during the pandemic to upgrade their infrastructure and provide essential as well as critical care equipment. We contributed significantly towards helping alleviate the oxygen shortages experienced during the pandemic by supplying O2 concentrators and setting up O2 generation plants. The company contributed rupees 50 lakhs towards a free vaccine drive to support Greater Chennai Corporation. To provide access to quality health care for people from disadvantaged backgrounds, several upgrading projects are underway at community hospitals. The team at Jamshedpur organized a blood donation camp where employees actively participated. They also supported the Assam State Transport Corporation with the hand-operated sanitizer kit. In pursuit of our sustainability goals, we upgraded solar streetlights at Ambattur Industrial Estate. Digitalization plays a crucial role in upskilling youngsters and increasing the employment rate in India. On that note, we have made significant strides in setting up centers of excellence in educational institutions and have trained around 1,400 students across niche areas such as IoT, smart factory, and Industry 4.0 to make them future ready. Awards and recognition. ZF Commercial Vehicle Control Systems India Limited won the Supplier Samrat Award and InnoVista Award from major customers as well as Supplier Award for Technology Innovation. During the financial year, our Ambattur plant was also nominated for the Global Kaizen Award through the Integrated Manufacturing Excellence Initiative, one of 6 finalists globally and the only company nominated from India having secured a platinum medallion. Jamshedpur site also underwent the IMAC assessment and secured a silver medallion. Ambattur plant won silver award, 5-star award, and Mahendra City plant won a bronze award, 4-star in the CAI, Confederation of Indian Industry, EHS Excellence Award, Environment Health Safety Excellence Award. So ZF Commercial Vehicle Control System India Limited, Mahendra City plant has been chosen for Export Excellence Award for our export performances in FY 2016-17 and FY 2017-18. Our employees continue to demonstrate high levels of engagement and participated in various external TA conclaves, total employee involvement conclaves, winning numerous awards across several categories in the fourth quarter of the fiscal. I'm happy to share that in the quarter, our teams won a total of 10 awards, both at national and regional level, in the various competitions organized by Confederation of Indian Industry, CAI, Auto Component Manufacturing Association, and QCFA, Quality Control Federation of India. And now moving on to our financial performance for the quarter. For your ready reference, the results were made public at 6 p.m. on 20th May 2022. I hope you have had a chance to go through them. The commercial vehicle production in the country grew by 6.7% over the same quarter in the previous year and 40.9% for the full year 2021-22 over 2020-21. We outperformed by 6.4% in this quarter. Our sales thus to OEMs in this quarter is 365.5 crores. This is 13.1% higher than the previous year corresponding quarter. We also closed the year with sales to OEMs at 1,031.1 crores, which is 50.6% higher than the previous year. Overall strength in demand ensured that our aftermarket sales were up 8% quarter on quarter to 101.2 crores and year on year up by 28.6% to 334 crores. Exports resulted in an income of 247.3 crores in Q4 of financial year 2021-22 and year on year 30.8% growth with 944.3 crores. Our engineering and other services continue to provide very strong value to our customers in the group. The growth in service income is very healthy, 35.3% quarter on quarter and 23.8% year on year. While I have shared the good news on our top line, I must be clear that the current period is very challenging from a profitability perspective. Overall, we have achieved a profit before tax of 76.72 crores in this quarter and 195.74 crores for the full year 2021-22. For financial year 2021-22, PBT is 8.5% of our product sales. Our EBITDA for this quarter is 13.6% and for the year 2021-22 is 12.6%. We continue to carefully review the environment and our performance to consider further opportunities for actions to mitigate ongoing commodity inflation. This is important as we also see softening of the commodity prices going forward. Thank you. We now welcome your questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, Anyone who wishes to ask a question may press star and one at this time. The first question is from the line of Vimal Gohil from Union AMC. Please go ahead.
Yes, sir. Thank you for the opportunity. So just one clarification. If you could just highlight your domestic aftermarket business once again. I missed that number. The revenue.
For the full year or?
For the quarter, sir.
For the quarter. Yes. 101.2 crores.
101.2 crores. Okay. That will be close. Okay. Got it. Sir, just on the tonnage that you consider, when you say that this industry has grown by 6%, if the data that I have in front of me, which considers the whole M&HCV industry, that has grown by roughly 12.8, very close to 13%. So when you say the industry has grown at 6%, are you considering tonnages over and above 13 tons, or how is it?
Yeah. Thank you. So we always refer the air brake vehicle production. So it's largely M&HCV plus a part of the light duty segment, which is with air brakes.
Got it. But sir, over a period of time, your addressable market will go up, right? You will cater to other segments as well, going forward, as in when you introduce new products.
Yeah. So if you see the braking systems as such is now moving to, as the industry moves towards electric mobility, we see opportunities to really provide high value content products like the electric compressors. We are working with customers to really move from ABS-based braking system to electronic braking system, which has got, it is much more intelligent and closed-loop solution, which will be much more efficient than the ABS braking system. Also, the industry will move towards the electronic braking systems, electronic stability control, which will come as a mandate. Further, we expect the autonomous emergency braking, many features of that also will come in the industry, partly through regulation, partly through TOC type, the total cost of ownership.
Got it. So, which means that over a period of time, you will cater to most of the other segments, not only the air brake using segments, some of the other, the tonnages that you're not considering right now, that will also come under your ambit going forward.
But largely our technologies are only related to air brakes. So the vehicle segment itself may not very much change, except in areas like aftermarket, where we have now solutions that we can offer through the connectivity, technologies, which can be extended to other segments. But there again, we still are focusing on the air brakes, but then the opportunity there is wider.
Got it, sir. Sir, in the exports piece, what is the outlook here? We are seeing what we are seeing in the US and Europe, and when we look at the Class 8 production data, how do we look at this segment? We are putting up capacity as well in Chennai. So, do we see FY23 as a year of recovery, or are you seeing some recovery some while away in exports?
Okay, so export, they are currently also serving to the CV industry. They are also serving to the passenger car industry. We supply one product for a passenger car industry to BMW and similar vehicle platforms. Essentially, the product that we supply for the air suspension system in those cars, that segment is growing despite all these global challenges. Today, even now, it's growing. And we see a good growth in that segment. In terms of other product lines that we supply, if you look at compressors, we are producing in Mahindra City to global customers. The customers are expanding. What we started with one customer, now we are expanding the customer base. More customers are sourcing from us. And there is another product which we make, that is actuators, brake chambers type of products, where we are gaining global market share. So that also expanding. So I see a positive growth. Whatever is a temporary phenomenon, in our view, it's only temporary, but we have clear roadmap to grow in these products. And we have also launched a new product, automatic slack adjuster. Again, there's a huge global market available. We have started increasing our supply. So opportunities are there for us to grow.
Sir, what was the name of the last product you just named? Automatic
slack adjuster.
Okay, so this product is from ZF Stable, or this was indigenously developed by WABCO entity?
Yeah, it's a indigenously, locally developed product. So we also supply to some segment in India, but we see a good margin in global market, so we are expanding to global market.
Right. So lastly, I just have one question on margins. Considering the raw material cost and freight cost, as and when these normalize, do you see your operating margins reverting back to 15% over the longer term?
Yeah, that's the plan. That's the target with which we are working. We are taking many initiatives. One is, of course, trying to recover the commodity inflation from the customers, which has been steadily improving from what it was a year ago. But now, in terms of percentage, we have improved our compensation from the customers. We are also rapidly localizing products that we used to import. Plus, of course, I said few products we are also redesigning to the cost, to reduce the cost. Plus, of course, the factory and the supply chain productivity is also a key topic, which we have been working. So we have clear roadmap to really get back to our earlier position, subject to any further uncertainties, etc. But we are clear. We have clear actions.
Right. Fair enough, sir. Thank you so much. I have some more questions, but I'll fall back in the queue. Thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Jinal Sheth from Auriga Capital Advisors. Please go ahead.
Good afternoon, sir. Sir, in terms of competition, we had Nordbremse, which is, present in the core business. But in the last few years, obviously, we've been talking about new product introduction, and obviously today and then tomorrow in terms of how the industry evolves. Is Nord a serious player? Any other players that have come in and are, could be any threat in that sense? Just wanted to understand the changing industry landscape there.
Yeah. So competition, in our view, we cannot discount the fact that new competitions can come, because many of the future technologies will be driven by software-based solutions. So new players can enter. But the advantage that we have is, the global support base, support in the area of, the functional safety and, the data security or cyber security type of certain dimension. It's very difficult for new players to address. We have certain competitive positioning, competitive edge. In terms of the technological strength, I'm not discounting that the new players cannot do that, but the point is the advantage that we have, the scale that we are able to leverage globally. Also, new products in the area of advanced driver assistance system, etc. You need a scale. We are trying to leverage the global scale-ups with us in terms of manufacturing radar or a camera or such sensors, such things. Also, in India market, you also need to have a strong presence in the aftermarket to be a successor in the OE business. Again, like this, there are a few differentiations that we have created over the years, further strengthening those differentiation with our new parent, ZF. ZF one of the top 3 global players. You always leverage on the scale and the competencies that are available globally. While we are constantly monitoring the competitive positioning, we are also strengthening our differentiation further.
So with all these points that you mentioned, currently there is no serious peer or player that is focusing in all these areas, is it?
No, if you look at braking, it may be so, but if you look at connected solutions, we also want to play a key role in the connected solutions. We are partnering with one of the OEMs and then providing the connected solutions support. Also, the entire aftermarket, vehicle park. We have got 30 lakhs vehicles on road. You can all make them connected and offer solutions. That space is very wide. In those areas, anybody with a competency, software competency, or a hardware, electronic hardware design capability can supply. There are large players there. But the point again, the market will more and more move towards the high technology areas in the field of digital. While there could be competitions, but the way we are positioning ourselves is to play again a lead role. We have set up a global engineering center in Bangalore. Of course, that is a global entity for developing digital solutions, capabilities and data analytics. All those competencies we are building there, not only for India, but also for global. It's a very robust engineering, release processes, design solutions, etc., which is the strength that we have versus any other small player. But I believe as the industry moves to the next on the technology level, it started with the track and trace. Anybody who can actually put a track and trace system initially got into the business. But today, you need to have the over-the-air update capability, which soon we will be launching. We also have a global platform. So we come with a global platform which is developed for the global requirement. So we released it in India. So this type of global support, global capabilities, technology evolution is something that will differentiate us. Again, offering those solutions to the market at the price the market accepts. So while I don't discount new players, but we are also strengthening our position. That's what I expect.
Okay. And just lastly, when are we expecting the new facility for the exports to come up?
Yeah, so right now we are doing the land development. We expect the investment approval to come in a matter of next 1 or 2 months. So we expect next year by this time the site will be ready around the time. Of course, our planned time is August 2023.
Oh, okay. And lastly, do we expect a strong pickup in exports once this facility is ready to go?
Yeah, that will help, but we are not stopping. Actually, the current facilities will support them. We expect the growth to continue, but that facility will actually more than export. It will support to the domestic market also because that has been approved for the PLI, Production Linked Incentive. So some of the advanced products that is included in the PLI we will be making there to get both in terms of tax benefit, also in terms of the PLI benefit.
Okay, thank you and good luck, sir.
Thank you.
Thank you. The next question is from the line of Priya Ranjan from HDFC Mutual Fund. Please go ahead.
Yeah, thanks. My question is related to, most of your products are related to brakes, and braking parts. So if I consider it...
interrupt you, sir. This is the operator. Request you to speak a little bit louder.
Okay. Is it audible now?
Yes.
Yes.
Yeah. So my question is related to, most of your products are related to the braking systems. And if I include all the braking systems, say ABS, disc brakes and ESC, the electronic stability control, ESC, etc., and hill hold, etc. So what kind of the content a truck can easily have in India if all the systems is actually taken from you, and depending on the Indian cost. I mean, there might be a global cost, but Indian cost will be obviously much lower than the global cost.
Yeah, you can probably see today it's in the range of around 45,000 rupees. You can probably assume it can be 3 times of that.
Okay. So the breaking cost of it.
Globally, it is still higher, but it's everything, all these technologies that we have, it is adapted and applicated with OEM. So we can go to, I would say, 3 times of that, which is roughly about 1,500 euro. But again, there are many ifs and buts, but that is the kind of numbers that one can expect when the industry matures and applicates all these technologies.
Understood.
This is the operator, sir. Is that answer your question? Mr. Priyaranjan? As there is no response, we'll move on to the next question from the line of Shyam Sundar Shriram from Sundaram Mutual Fund. Please go ahead.
Yeah, hi sir, good afternoon. Thanks for taking my question, sir. Sir, my first question is, firstly, congratulations on the EV bus nomination per se. Sir, how much will be the content in a EV bus, considering that you are going to supply?
Thank you, Mr. Shriram. The audio is not clear from your line. Requesting you to use the handset mode.
Yeah, hi sir. Hope this is audible. Congratulations on this EV bus nomination, sir. In a EV bus, considering that you will be supplying electric compressor and the EBS per se, how much is the content, approximately, just some ballpark range in an EV bus? That is the first question. Secondly, as we stand today, what is the kind of market share we have in EV buses within India? I understand the segment is very nascent, but just to give a sense of who are the other competitors, because in the traditional braking system, we were the dominant players per se. So how does that look like in the EV bus from a market share perspective?
Yeah, thank you. So actually, the e-compressor, electric compressor, roughly it's in the range of, I would say, $1,000 to $1,300, depending upon the different variants. That's the current content. The electronics braking system. So, electronic braking system, again, it's a matter of customers have to adapt. In all the EV, but that is not the current situation. Few customers have adapted, few customers are still trying to operate with the ABS-based solutions. So, if it will adapt, then it can add another possibly about 400 euro delta to the braking system itself. But again, as you also said, that it's the size of the market is very small today. But the good thing is that we have very proven products, and we have started delivering some of these products already. In terms of there are other products will come in this. Anything that will improve the efficiency of the vehicle will find a place in the electric vehicle, because you need to save the battery power. We have tire pressure monitoring systems, which again will help improve the efficiency of the vehicle. We have disc brakes. Disc brake will improve the efficiency of the vehicle. So all these things are being adopted by the customers. Not all, but few customers have started adopting, and our focus is to make sure all these products find a place. Now coming to your question of what is the market share, etc. See, again, it's a too early stage. And in the electric domain, nobody knows who will be there, who will not be there. But we are in a very strong position. I don't want to actually make any number, give any number, but we are in a very strong position in all these products, because these are all either demonstrated successfully, demonstrated and proven elsewhere in the world, and that advantage we have, because some of these products are in the series production.
Okay, and these are all localized, sir? What we supply, the electric compressor or the EBS, is that localized, or will that take time given the volumes are still picking up?
Some of the products like disc brake we have localized, because we will be adopting that for even the normal vehicles. And the other products not localized, but we will be meeting the localization requirements, because the FAME 2 demands certain percentage localization. So we are adapting to that.
Understood, sir. Understood. Sir, under PLI, you did talk about that we are also we have been selected as one of the component champions. Many congratulations on that, sir. What kind of product aggregates are we targeting under PLI, and how much investments are earmarked under PLI per se?
Yeah. Because I will talk to you on the products. Raja will actually give you some idea of the investment, because in PLI you need certain minimum threshold investment as to done. So as far as the products are concerned, all these advanced products, basically anything on electric vehicle at a very broad perspective, anything on advanced braking system like ESC, electronic braking systems, ADAS, etc. And also these connected vehicles and new vehicle, the digital solutions, those products, mostly electronic, the ECU-based electronic control units, etc. at a very broader level. But we have clearly included quite a few of our products in the PLI scheme. So, Raja, would you like to take the question on the investment requirement and our plan?
At this point of time, Shyam, is that we are looking at all the different categories of products. So if we have to put it in categories, there is one category which is already in the advanced automotive listing of the PLI. We have some products already as part of it, and they are already in our strategic plan, and there is an investment already planned for those. And beyond that, we have some products which we have made a special representation, because predominantly the list was made looking at the passenger car segment. And given that some of these products very strongly qualify, some of the products which we had recommended qualify to be as advanced automotive, if you look at it from the perspective of commercial vehicles, they are also, the government said that they are considering them. The third category is the electric side. In all this, we are formulating our plans both from the investment and also planning our sales based on the evolving scenario. You would appreciate that quite a few of the products which are put in the list belong to those areas of industry where the government itself is expecting an evolution, and they are in their nascent stages. So we do have plans, and we are making plans first to somehow exceed the threshold limits of 150 crores of investment within the period, and also ensure that we have a significant sale, which is a 10% growth over the base year. So as and when we have more firm plans and we are clear that this is the direction we will go, we will be giving this information to you all, so that you are understanding our plans going forward.
Sure, sir. Sir, just one additional question on this. How much capex are we planning over next 2 years? Sir, that 150 crore Oragadam capex we already spoke about. Other than that, how much capex are we planning at WABCO level, sir? WABCO India level?
At a WABCO India level, our run rate is always been 100 crores of normal capex. And if you remember, the last year we also have invested on the plant, the site, about 75 crores. So it took us all the way to 175 crores, and the Oragadam plant and the machinery associated with that will bring in another 150 crores. But the standard 100 crores would continue. And then we have to see what more comes as a part of this electrification and other areas, which we will also do as and when the projects are getting more mature.
Sure, sir. One last question on the margin side. In the last quarter, you had mentioned specifically at the OEM segment that we have recovered 70% of the inflation per se, and about 50% in the aftermarket. Now it appears from the Q4 numbers that we have not recovered much per se incrementally. As we stand today, how much more raw material cost is yet to be recovered, sir? Any broad understanding if you can please provide?
If you look at the results from a sequential QOQ basis, you would see that there is a significant improvement in the margins, which came from better recovery and also better efficiencies which we are putting in. And we also have to understand that as recovery happens on a material cost on a rupee to rupee basis. It does not bring in the additional margins as we normally have. So we are putting in quite a few projects to identify that particular load which doesn't come, which is additional because of the rupee to rupee compensation, but the overhead not being covered. We are trying to identify more and more projects. Now, if you ask me what is the percentage we have secured, we are progressing very strongly to ensure that every rupee is recovered. Our target is at least 90% from the OE side and 100% from aftermarket, and so on with other segments. And we are progressing in those directions. And I say the progress is good so far.
Okay, understood, sir. At least until Q3 cost, whatever we saw, is that all recovered, sir? Leaving aside any inflation in Q4?
Q3, as I told you, that improvement of about 3% in margin which you're seeing is coming from a lot of recoveries and also efficiencies.
Correct.
So,
okay, understood.
We have recovered. The recovery progress is on. It is gaining traction. But generally, it will not be right to quote the exact percentage of how much we incur and how much we recover. But it is definitely gaining traction and going in the right direction.
Sure, sir. Thank you very much, sir. I'll fall back in the queue. Thank you.
Thank you.
Thank you. The next question is from the line of Priya Ranjan from HDFC Mutual Fund. Please go ahead.
Yeah, hi. My question is related to the air suspension used in trucks. Globally, what is the percentage, and do you see any reason or any adoption in air suspension in trucks right in India?
Air suspension?
Air suspension. Advanced suspension system from the leaf spring to...
Yeah. So air suspension in India largely is used only in the bus segment. And now there is a adoption of air suspension in the trailer segment. The trailer segment, because there is a incentive that if you use air suspension, you can have a additional 1 ton each axle. So we are actually having a solution for the trailer segment, and we are offering, of course, not full air suspension mechanical system, but ours is more on a control system. On the bus segment, we have a solution, one developed in India. Also, the other one much more, I would say, lightweight solution from ZF. So both actually the bus segment, if you see in the last 2 years, there is no production of buses. So we didn't make any big breakthrough or entry yet. But what is unique in ZF or WABCO is that we have a electronic control for air suspension. We call it ECAS. So electronic control in air suspension makes the mechanical suspension very intelligent. It's a smart suspension. So technically, we have a very, very elegant and excellent solution. Now the bus market is picking up. Our solution that we are having from globally, we would like to really promote this in a big way. Not only for the bus, but also for the truck segment. Truck segment also progressively it will start adapting in certain segments where they need to carry fragile goods type of thing. It may start from there. Right now we have not made a big entry except in the trailer. But going forward, this is one of our priority topic. But it will take some time because we have to localize the solution for the market here. I don't have much to give you at this point of time, but maybe in the future calls we will update you with the progress.
Understood. And any thought on, say, what is the percentage of air suspension users in trucks in Europe, etc.?
Yeah, in Europe, I think more than 65%. That's my gut feeling. But generally, in those markets, these things are very highly adapted. Penetration is very high.
Okay. And in terms of the domestic revenue, I mean, ABS is contributing how much now, or broadly for full year level?
Sorry, ABS, sir?
ABS.
I couldn't get that question. So in India, ABS is as a percentage of the total volume.
Total turnover of the company.
Raja, I don't have the correct numbers here right now. Maybe we will give you eventually.
So, sir, during 2017, we used to track what is the incremental revenue which came because of the ABS introduction. We stopped tracking it because now all the vehicles which are coming with ABS, and we call the entire thing as one braking system. So we don't track it separately anymore.
Separately, yeah.
Okay. And within the addressable market, so all the addressable market, our market share will be like say 75-80%. I'm not wrong.
Yeah, the addressable market, if you see, it's mandated. So by and large, the air brake vehicles are mandated to have ABS. In that case, addressable market is quite high, and we are playing a very major role. In a way, we are leaders in that segment.
Okay, sir. Thank you. All the best.
Thank you.
Thank you. The next question is from the line of Mukesh Saraf from Spark Capital. Please go ahead.
Yes, sir, good afternoon, and thank you for the opportunity. So my first question is just trying to understand what is your sense on the CV cycle now that seeing rather interacting with the OEMs as well. So how do you think the next say FY23 is going to play out for the CV cycle, sir, in terms of MHCV volumes for the industry?
Okay, so I couldn't get the question fully. Can you just repeat, please?
Sir, looking at your sense on the MHCV industry, how do you think the growth will be for the industry in FY23, maybe FY24 as well? I mean, we have seen some pickup in volumes, but do you think that the pickup in the CV cycle is now going to stay and we are going to see good growth? And if you can give some numbers, say, on percentage growth in the industry that we can see.
Yeah. Few things we are tracking. Number one is the utilization of the truck in the market. We see the truck utilization has been quite high, in the range of 80% plus, which we see one of the highest in the recent years. So we believe this will trigger a replacement cycle because in our view that anything more than probably 65-70% will drive the replacement cycle. So plus we also understand the freight index. The freight rate also has been quite has been increasing, even offsetting the increase of diesel. So all these things indicate that the fleets will be profitable, so they will be investing on more trucks, etc. So this is one aspect. Second is, of course, the tipper segment has been doing quite well. Even last more than a year, they are doing quite well. We believe it will continue because of the investment on infrastructure and construction, mining, and so many things. Also, we believe the increase in the e-commerce, the increase due to e-commerce activity also will be driving the growth in the industry. So, from every respect, we believe the growth will continue. Not in a position to put an exact number, but we believe this growth cycle will continue. that's why I also said in my note that it could continue for at least next 2-3 years, barring any untoward events, etc. But it's a very positive. We have a positive outlook.
Right. Right. Thank you for that, sir. And
the bus segment also started picking up in a significant way.
Right, sir. Understood that. And sir, secondly, on the ABS part, when you mentioned that we are largely already kind of supplying to the addressable market. Has the trailer market also now started adopting it? Because what I remember in the past is that was one segment where ABS was still not adopted, although it created. So has the trailer segment also started seeing good adoption on ABS?
Very good question. Trailer segment has been adopting these technologies very well in the recent times. In a way, we didn't anticipate that way, but now a lot of vehicles are adopting the trailer ABS. We also see good amount of sales for the trailer EBS, electronic braking system, particularly those fleets which are carrying the hazardous goods type of fleets, the global fleets. The fleets of the global companies, they are all adapting to trailer EBS, and we also launched one advanced product which is called Intelligent Trailer Program, which is basically a trailer EBS with additional features. Also, as I said, the air suspension systems also getting adopted in the trailer. Trailer segment is very well adopting the technology. So again, positive news for us.
Right. Thank you for that. And just one last clarification, sir. I think in the last conference call you had mentioned that the start of construction of the new plant will start sometime around March, April. But is there some delay in that now? Because now I think you said it will start in, say, second or third quarter.
Basically, we have started of course, there is a delay from what I did communicate, mainly because the architecture and other things had to be gone through certain review process globally. And we also meanwhile we have already started that land development activity, etc. already. So the building construction will we expect, as I said, it will take a little time because the final investor approval is in the final stages.
Okay, but this should not have any impact on, say, if demand suddenly shoots up, we can still cater to the demand even if there is some delay in this.
Yeah. We are in a position to handle this.
Sure. Thank you so much, sir. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Bibhishan Jagtap from Canara WABCO AMC. Please go ahead. Mr. Jagtap, your line is in talk mode. Please go ahead with your question. Mr. Jagtap, please unmute your line from your side if muted. As there is no response from the current participant, we'll move on to the next question from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Yeah, sir. Thank you for the opportunity. Sir, my question is, when it comes to margins, we see that, in the last 4 years, other than the gross margin, the biggest cost rise is the employee cost. Can you give some comments there as to this steep increase in cost, and does it mean that the benefits? Okay, first of all, why has this cost increased so much?
Raja, would you like to answer?
Yes. I didn't get the name. What is the name again?
Pritesh.
Yeah. If you should look at the employee cost from the perspective of the annual inflation, which actually is minimal in our case. But you also have to look at the raise in the other operating income, which is essentially a service income. ZF India provides a lot of services to global ZF in the form of engineering, the global business services, and also the hardware, the mechanical engineering side of product engineering. Even that has been growing significantly. So largely, the major portion of the employee benefit which you saw across many quarters would be because they have been adding people and skill sets, which also is generating revenue for the company.
So can you tell us what is the service income in 22 and what was, I have the service income in 18, but what is the service income in the current year gone by?
I could give it to you. Maybe we could talk again, and I can give you the details. But it's largely residing in other operating revenue. So you could just track what is there in the other operating revenue in our publications. It will be clear to you.
Okay. My sir, one more question linked to the volumes. So you mentioned that the OE India growth for us was 50% revenue. What would be the inherent idle volume growth in that number?
Sorry.
What should be the inherent volume growth for us in the India OEM business?
I didn't understand.
So one number which we mentioned in the call was CV industry volume for us has grown 40. CV industry volume has grown 41%. That refers to the air brakes vehicle in India, right? The other number that we mentioned on the call was our OEM business has grown 50% in value, which is 31 crores, right?
Yeah.
What would be the volume growth in this 50%?
Meaning out of the 40% is the industry growth, we have outperformed by about 10%, so overall 50% growth. Does that answer your question?
Then, sir, volume growth is equal to value growth?
You mean okay. So the selling price variance. You are saying how much is out of that selling price variance? How much is the
volume growth?
Volume growth. Yeah, Raja, would you like to?
So the question again is not clear. So the industry has grown 40% and our sales have grown 50%. So would you not say that there is a 10% growth of value growth over volume growth? The value per vehicle, would you not say that? I was just trying to understand your question better.
If I was just trying to look at whether there is any market share increase or loss for us versus that 40% number.
Okay, I will tell you. The increase of 10% includes the price increase that we would have got because of the commodity increase. That is one aspect. But also, in some cases, we must have also given a reduction as per the agreement with some customers. But in terms of fundamentally, we are not losing any market share. We are not lost any market share. But then against each segment wise, we need to look at. But all that I would like to tell you is that there's no loss of market share in this year, but it is the exact growth only if you say the number of components or products, it may not be that 10% growth. 10% growth includes the variance in selling price as well.
Okay. And sir, one clarification: the domestic replacement business for FY22 you mentioned is 400 crores. Full year.
Full year 334. I remember it's around 334.
And the growth was 8%.
No, at the full year level, it is 28%. Growth was 8% in the Q4.
Okay. Thank you very much, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Shyam Sundar Sriram from Sundaram Mutual Fund. Please go ahead.
Yeah. Hi, sir. Thanks again for the opportunity. Sir, on this software services or the engineering services business that we provide, under ZF, how has the scope of this business expanded? Any perspective that you can share per se? That is the first point. Secondly, sir, because this is it is like a separate organization in itself, a separate business than the manufacturing business. How to think of margins for this, sir? So will employee cost be 50% of this services revenue per se, and hence the margin should largely be around the balance for 40 to 50% per se? How to think of this business if we were to think of it as a separate engineering services business therein?
Yeah, on the margins, I'll give a very quick answer to Shyam, and then about the composition maybe you could take. Margins, this is a captive engineering and a contract engineering service, and the margins are based on a transfer pricing study, and these are based on the arm's length principle. and it is on a cost-plus model. But what exactly is the margin is something which we will not be disclosing. However, it is based on a TP study.
Okay. On the composition, so it doesn't change, from whatever we used to do, except that the new skill sets are required. As the world is up after the COVID, there's been a lot of demand for certain skill sets in the software side, and we have an opportunity to really raise the number hugely. In India can, there's a huge demand for the skill sets and headcount. And the new skill sets are, as I said, completely new domains, new areas, and we are actually trying to really fully support from here with that. Certain challenges in terms of getting the skill sets is the current challenge, but otherwise, in our view, this business will grow in a big way.
Understood, sir. Understood. And are we servicing, other than our WABCO, as in the ZF commercial vehicle division, any other division are we servicing? Have we started servicing any other division for their engineering requirements, sir?
Not yet. But the way ZF is organized is ZF has a big engineering center in Hyderabad. About 2,500 people are there. They are actually serving the other divisions. Right now, the Chennai team is actually only supporting the commercial vehicle division. So earlier it was the former WABCO part, but now there is an opportunity to expand it to the other part of the ZF division. But I would say it is yet to start, because the challenge right now we face is getting the more people recruited and getting the talent into the thing. And as I said, our focus will continue to be only the commercial vehicle part, which means apart from the WABCO side of the braking part, we may also have an opportunity to extend it to the other aspects of the commercial vehicle, which is essentially maybe clutch, maybe transmission, etc., which will progressively coming in. But right now, the software team is really expanding in the same areas whatever they were working, with the new skill sets in the software side.
Understood, sir. Thank you very much, sir. I'll fall back in the queue. Thank you.
Thank you. The next question is from the line of Bibhishan Jagtap from Canara WABCO AMC. Please go ahead.
Yes, sir. Am I audible now?
Yeah.
Sir, you talked about reducing the import content. Just wanted to understand what was our import as a percentage to sales in FY21, and how much it has reduced in FY22, and how much further it can come down in coming years.
Okay. Given the size, we would like to get everything done here only, because of the global supply chain challenges, and of course the opportunity to reduce the cost. The exact percentage I do not have right now, but all that I can tell you is we are in the range of about 80-85% of localization, by and large. It may vary from product to product, but now we are looking at there are we used to even import products from China, but with increased freight costs and so many other reasons, we see more opportunities to produce in India, the Indian supply chain. So our focus is to get, given the choice, everything here. But we are in the range of probably 85% now. Step by step, we are moving.
And sir, what was our market share in M&HCV segment? Sorry, I missed that number.
Sorry, no. I only talked to you about the localization. Currently, we are in the range of 85% localization. Roughly, you can take, because there are some products we completely import because the volume is low and the Indian supply chain has not developed. There are some products we are 100% making here. But if you want to get a rough idea, it will be in the range of 85%. But our idea is to move towards 100% if possible. So we are taking, there are many project teams working here to look at, those products for which there is an Indian supply chain we can really develop. So exact number, how much we have achieved in each quarter, I'm not in a position to answer.
No, sir. My question is actually, what is our market share in ABS segment now in M&HCV segment?
Yeah. Normally, we don't share the exact market share. I can only tell you we are the leader in India, maybe above 80%. Yeah.
Mr. Jagtap, does that answer your question?
Yeah, I'm done. Thanks.
Thank you. Ladies and gentlemen, due to time constraint, we will take that as the last question. I now hand the conference over to Mr. Annamalai Jayaraj for closing comments.
Yeah. We thank all the participants. We thank the management for taking time out for the call. Have a good day.
Thank you.
Thank you. Thank you all.
Thank you. Ladies and gentlemen, on behalf of Batliwala and Karani Securities India Private Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.